Hey everybody, this is Gregg Gossett from Gossett Trading and Mentoring, and today is Saturday, May 27th, 2023. I appreciate you tuning in to the Gossett Trading and Mentoring Weekend Review. In this podcast, this is going to be the format for today. First of all, we're going to have to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at all the trades that I entered and exited last week. We're going to talk about when I entered the trade, why I entered the trade, and most importantly, how I am going to manage the trade going forward. Hope this is going to be helpful for you to get an idea of the support resistance levels that I look at, the confluence combination of indicators that I look for my entry triggers. I have trades both on the daily and the weeklies, and so we'll go through all those. We'll take a look. After that, we're going to do a little bit on trader psychology. Always the most important part of trading is what's going on between your two ears in your mind. Are you following your process? That's the most important thing. We have gains, we have losses. We don't want to let our emotions get amplified and get us off of following our process. What does process consist of? Looking for rejections of levels, position sizing correctly, placing an emergency stop, having an end of day stop, taking partial profits as if the market moves our way, getting to a trailing stop level so we start tightening up and reducing our risk, right? There's serious overhead resistance levels that we need to be aware of. So there's a whole process in trading of using good trading principles, but what it really comes down to is being patient, waiting for a level to get rejected, and then knowing what you are going to do regardless of what the market does, because we have no control over the market, but we have to know exactly what we're going to do regardless of what happens. All right, so it's very important to have a good process, good risk to reward ratio, and letting the market show you that it's rejected a level. So I will explain all of this as I go through the trades that I placed this week. Then I have gone down through my master watch list. I've looked for some potential trades for next week, both on the daily, the weekly charts, and actually also the monthly charts, because monthly charts close this coming Wednesday. So I have a couple good ones that I'm looking at there as well. All right, so that's what we're going to do. I hope it's going to be helpful for you. Been quite an interesting week in the market. It's really been a tale of two cities. NASDAQ, of course, kind of almost in bubble territory. Some of the conventional old school stocks, especially in the Dow, have just gone down. But I think it gives a good opportunity to buy. I think the NASDAQ seemed a bit overheated, to say the least, and some of the traditional Dow stocks offer some good potential entries for us. So we'll go through all of that. All right. So I appreciate you being here. I hope it's going to be helpful. I'm going to run the U.S. legal disclaimer real quick, and I'll be back in about 40 seconds. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, let's get started with the trades I took last week on the daily. First on deck was Pfizer. Now, I usually wait until the end of the day to make my decisions for my swing trades. Now, Pfizer was a little bit of a opportunity that I saw during the day. We went, I entered the trade here on the 22nd of May, under 30 over 30. Usually I wait till the entry, but the day before it was below it was below 30 RSI. The next day that I bought it, I saw it go over the 30 RSI intraday, and then there were also some news about a drug that they were looking to get approved for weight loss that I've been following and I saw. So I did enter here intraday I don't usually do this, but there's always an exception, and it was a great trade. I entered here 36.88. Now, when I enter a trade, I always position size. I take 1% of my total capital. I divide it by the value of the 2 ATR that shows me how many shares to buy, and then I place my emergency stop exactly 2 ATRs below my entry. My end of day stop would simply be a close below the 30 RSI. So it worked out great. Now, when I enter a trade, I always take partial profits on the way up. That's just part of my trading approach. I like to play offense and defense. The offense part is taking partial profits on the way up if it moves a value of 0.45 from the previous day's close. So actually on this day here, I took 30% of my profits off. Next day here, I took another 20% of my profits off because it was such a huge move up. So took those off, locked those in. The market can't take that away from me. But then I have some rules. If I have an under 30, over 30, and we get to trailing stop level is always 1.5 ATRs from my entry. And when I get to trailing stop level, then if I have a close below a previous bar's low, I get out of half the position. This is also an under 30, over 30 RSI. So here on the 25th, orange line is the trailing stop level. So once we get to trailing stop, if I have a close below a previous bar's low in the future, I take half. But in this particular trade, because it's an under 30, over 30, I got out of the entire position here at 37.88 for a profit of 2.56%, although it was higher because I took partial profits in. Remember what I just said about taking partial profits, the offensive part. But in this particular day here, we closed below the previous bar's low. That was the first signal, but also we went over 50 RSI, under 50 RSI, so I took the entire position off. So I know this probably sounds complicated. It is one of the more complicated approaches that I use with under 30, over 30s, but I do want to point out, I do teach private one-on-one lessons in the evening time. I teach a great course. I teach you all 5 of the trading approaches that I do use, and I teach you step by step. It's a great course. I've taught people from all over the world. I've been trading for 28 years and have a lot of experience in trading, and I'm a very good teacher. So if you are interested, if you really would like to learn one-on-one with a very experienced trader and a good teacher, I might add, just send me an email. Email is in the link of the description. The course costs $1,750, but it really is an investment in you and giving you a skill that you can use for the rest of your life trading. All right. And I'll talk a little bit more about this at the end. But again, under 30, over 30, I usually wait till the end of the day. But in this particular case, I did make an adjustment because of the news that came out, and it was the right move, and locked this trade in for 2.56% gain. Oh boy, this one was frustrating. I did buy the Dow Jones Industrial when it rejected the 200-day moving average. I bought here at 327.99. I position sized correctly. I placed my emergency stop 2 ATRs below, and my end of day stop was a close below the 200-day moving average. And unfortunately, on Thursday, it closed pennies underneath, had a very small loss, 0.08%, but that's the thing about following your rules. You really need to, and a lot of times you'll get stopped out, and then the next day it will just run away from you like it did here. But the reason I took the trade was because we rejected the 200-day moving average. There were no more sellers during the day. There were no more sellers under the 200. It closed above. That was my level. Bought at 327.99. Position size 2 ATR emergency stop, closed below the 200 was my stop, and it closed just pennies under. I got out, and then Friday we had the big move up. But that's trading. That's life in the big city with trading, and it will happen to you many, many times, but it could have continued down, and I would have been glad that I got out. So this was a very small loss, 0.08%. Let's go to the weekly trades. All right, I have been in this trade for a long time. I really like weekly trades. I bought IWM all the way back here, 10/14/22, when we rejected the 300 week, the 300 weekly moving average. Weeklies close on Friday, so you can see we went under the 300, but after at the close of the week, we closed above the 300 SMA. That was my signal, showed me that, okay, there are no more sellers underneath this level. So I did get long here. My position size, I placed my emergency stop 2 ATRs below. If it closed below the 300, I would simply have gotten out. Then I placed my 1.5 ATR trailing stop level up here. Oh, that line disappeared. Anyway, right about here, as it moves up, I take partial profits, took partial profits. Here we took partial profits. I did get to 1.5 ATR trailing stop level here, and then we had a close below a previous bar's low. So I sold the remaining shares, half of the remaining shares, excuse me, with the first close below the previous bar's low. Then it came back down. I thought, oh, we're going to lose the 300. We didn't. We had another huge move up where I continued to take partial profits. And then if it had continued to move up, got to the 70 RSI, then I would have taken off half of my position. After that, if I had a close below another previous bar's low after rejecting the 70, I would have got out of the entire trade. But then it headed and moved back down, but you can see it's still closed above the 300 week moving average. So very nice trade. Lots of profits in this move up here, lots of profits in this move up here. And the remaining shares that I have still profitable, up 5.11%. All right, XLF. I did buy XLF back here on 324 with this bounce at the 250 week moving average. I got long here, 3071 position size. Place my emergency stop 2 ATRs below. End of week stop, simply a close below the 250. Place my 1.5 ATR trailing stop level up here. So if it got there, then I will sell half if I have a close below a previous bar's low. And in addition to that, I take partial profits as it moves up. A few weeks later, it did get to trailing stop level here. So now I'm in trailing stop mode, and now I'm just looking for a close below a previous bar's low to get out of half the position. Well, it's never happened. We never had a close below a previous bar's low. We did go below last week's low intra-week, but then close back above. So this particular trade doing well, up about 4.43%. GDX. All right. Well, this one didn't work out so hot, tamale. I like the trade. I took the trade last week on Friday with the rejection of the 200 week moving average. Of course, I position size, place my stop, emergency stop 2 ATRs below, place my 1.5 ATR trailing stop above. But last week, moved down, clearly closed below the 200 week moving average. So I got out of a loss of 5.39%. All right, VIX, here we go. Well, this was an interesting week. I did buy VIX last week when it went under 30, over 30 on Friday, bought at 35.51 position size, placed my emergency stop 2 ATRs below, placed my 1.5 ATR trailing stop above. My end of week stop is, why did I take the trade? Because it went under 30, over 30. So if I get a weekly close under the 30 RSI, I would get out of the trade. Well, it's 30.26, so I'm staying in the trade. It did move up the value of 0.45 ATRs here, so I did take off 10% of the position at about a 6% gain at its high, but only 10%. And so right now it's still holding the 30 RSI. I'm still holding the trade, and it is up very, very slightly. Let's take a look here. About 0.45%. So if this next week closes under the 30 RSI, I will simply get out of the trade. If it moves up and moves the value of 0.45 ATRs, I will continue to take partial profits. If it gets to my trailing stop level here, then I will go into trailing stop mode. All right, so that's a recap. I'll do a quick recap. Pfizer got out with a 2.56% gain this week. Diamond on the daily, Diamond's loss of 0.08%. IWM, current position up 5.11%. XLF, current position up 4.43%. GDX closed the position with a loss of 5.39%, unfortunately. And VIX currently up 0.45%. So let's do a little trading psychology. This is from Trading Composure, great channel over on Twitter at Trading Composure. Please follow. You'll learn a lot. Let's see what they have to say. Any trade can turn out to be a loser no matter how large your edge is. Totally true. Welcome to uncertainty. If that doesn't make you profoundly humble, then nothing will. And if you have no humility, I don't see how you can do well as a trader. This is all about getting your ego out of trading. Of course, we always want to be right, but we have to follow our process because we cannot affect the market. At least I can't, right? So I have to know exactly what I'm going to do regardless of what the market does. But yes, trading is about uncertainty. The only thing that you have control of is when you enter, how much you enter, and then what your process is going to be, your emergency stop, your end of day stock, taking partial profits. That's it. And you better stick to it. And you better stay humble and follow your rules. Just like that diamond trade that I had where it closed under the 200. You know, of course, there's part of me is like, it didn't close under very much. I should probably keep it. But I didn't because I have to follow my rules, and that's how you are going to stay in the game. You have to stay humble and respect your rules. And then, of course, Friday, it went racing up. I wasn't in it. Oh, well, that is what happens. But listen, if you want to stay in this game in the long run, you have to do that. So any trade can turn out to be a loser no matter how large your edge is. Really good point. You know, you can have all sorts of multiple confluences, combination of indicators lining up, but it is not guaranteed to trade. So don't fall into that trap where you're like, this is such a good trade, I'm going to stay in, because it doesn't have to work out. Be humble, follow your rules. So any trade can turn out to be a loser no matter how large your edge is. Welcome to uncertainty. If that doesn't make you profoundly humble, nothing will. And if you have no humility, I don't see how you can do well as a trader. So stay humble. Follow your rules, and please follow Trading Composure at Trading Composure over on Twitter. All right, so as I've mentioned, I have gone down through my master watch list. I have looked for both on the daily and the weekly charts and the monthly charts, actually this month as well. And I'm looking for entry levels where the price has rejected those levels, both to the short side and to the long side. All right. So now I'm going to go down through each one of these. There is a potential that all these trades could trigger on any one day, but that doesn't mean I'm going to take all the trades. I'm going to narrow it down to the best one. I always take the best trade of the day. And what's the best trade? Which one had the most confluence of indicators, which one has the best risk to reward ratio. That's what I'm looking for. So keep that in mind. If all these were to trigger Tuesday, for example, I would not be taking them all. Okay, here is silver. When I look at this chart, I say, okay, where is a level where I know some buyers are most likely to come in? Well, this black line here is the 200-week moving average. A lot of professional traders, hedge funds, will come in at these levels, but I want to see the price reject the 200. Either bounce at the 200, go under the 200, but close back above the 200 on the day, or close under and then close back over. So the AGQ, double leverage silver, we had a big move down, and I'm looking for some kind of rejection at the 200. If it rejects at the 200, I will consider taking the trade. Right now, Friday it was up 5.11%. You can see Thursday it got very close to that level. If it gets there next week, great. I'll consider taking the trade. If it doesn't get there, I will just wait for another market that does reject some kind of downside level that I'm looking for, or some kind of upside level if I'm short. So on AGQ, what I'm looking for next week is some kind of rejection of the 200-week moving average, the black line. Anheuser-Busch, BUD. Well, of course, there's look at this move down. It is incredible, unbelievable, incredible with all the controversy that's going on with Budweiser. But I'm not going to take any of that into account. All the drama. What I'm looking for is a level that would offer me a good risk to reward ratio. Well, The 200-day moving average, the black line here, is what I am looking for. Again, just like AGQ, I'm looking for some kind of bounce at the 200, intraday rejection of the 200-day moving average, or simply a close under 30. Close under the 200 or back over the 200. So that's what I'm looking for. If it does that, I will consider taking the trade. If it doesn't, I'm just not going to get interested in the trade. That's all there is to it. So some kind of rejection next week at the 200 on Anheuser-Busch. If it does, I'll position size. I'll place my emergency stop 2 ATRs below, and then my end of day stop will simply be a close under the 200. If it works my way and starts moving up, then I'll start taking partial profits if it moves the value of 0.45 ATRs from the close. And again, these are all the things that I teach in my one-on-one course. It's in the podcast here, I only have a certain amount of time to do this, so I can't really get into the weeds. But in the course, the one-on-one course that I teach, I definitely get into the weeds, and you're going to learn it all. It may sound complicated, but when you're done with that course, you will have it down. So Budweiser, rejection of the 200-day moving average. Walt Disney, look at Walt Disney. My gosh, just crazy, especially if you juxtapose that over what's happening with the NASDAQ, which of course is going straight up. But Walt Disney, what level am I looking for? 200-day moving average is all the way up here. The 300-day moving average, 250, they're all above. So what possible level would I be looking for rejection to the downside? The 30 RSI level. This is what this is part of what I call the deep dip buy stock trading program, or stock trading approach is what I teach in my one-on-one. But I'm looking for a rejection of the 30 RSI, either a close under the 30 RSI and then close back over, or some kind of bounce at the 30 RSI, or where it goes under the 30 RSI during the day and closes back over at the end of the day, because those end of day prices are very important. So that's the level that I'm looking for, an under 30, over 30, or some kind of rejection of the 30 RSI. If it does that, I'll consider taking the trade. If it doesn't do that, then I'll just move on to another market. Coca-Cola, again, look at these kind of legacy stocks in the Dow. My gosh, the sell-off. Why are these selling off? Well, they're selling off because money flows are all going into the NASDAQ. It's like a balloon. If you have a long balloon and you squeeze one side, it inflates the other side, and vice versa. And that's what's going on with the stocks in the Dow right now, especially kind of these consumer well-known stocks like Coca-Cola, Philip Morris, Disney. But I think it's getting overdone. I'm not going to just rush in to buy because I think it's getting overdone. I need some kind of level to show me that that level's been rejected or respected. And in this particular case, a close back over the 200 would be the signal for me. Right now, the 200-day moving average above us is acting as resistance. If it closes above the 200, then the 200-day moving average is acting as support. It's a very low RSI. My gosh. I mean, we went from a 70 RSI here straight down to a 30 RSI, which is really incredible. But I think there's some values here. So what I'm looking for is a close over the 200-day moving average. If it closes over, rejects it, and I have the support below, I'll consider taking the trade. I'll position size by taking 1% of my capital, dividing by the value of the 2 ATR. That will show me how many shares to buy. Then I'll place my emergency stop, exactly the value of 2 ATRs below. And then if it closes under the 200, then I'll simply get out for a small loss. If it keeps moving up my direction, then I'll take partial profits along the way. If it gets to my 1.5 ATR trailing stop level above my entry, then I'll go into trailing stop mode so I can tighten up the stop. If it continues up, I'll continue to take profits. And then if it gets up into the 65 RSI level, then if I have a close below the 5 EMA, I'll exit the entire position. If it rejects the 70 RSI, I'll sell half of my position. And then lastly, after rejecting the 70 RSI and after selling half, I would sell the remaining half if I have a close below the previous bar's low. Sorry, my voice is a little rough today. I woke up a little under the weather, so apologize for that. So anyway, Coca-Cola, what I'm looking for is a nice gentle close above the 200. If it closed way up here, I'm not going to take the trade because now the risk to reward ratio down at the 200 is not good anymore. So a nice gentle close above the 200-day moving average doesn't mean it's going to work, but it gives me a good line in the sand to base my trades and my stops over. Hope that makes sense. Last but not least, Philip Morris. Look at this. Again, it looks like the same chart over and over and over, right? 70 RSI up here. Now we're all the way down here, which is incredible. 200, 250, 300 SMA. So if they're above, what's the level that I'm keying off of? Well, look, the RSI level is 28.19, meaning if I get it closed back above the 30 RSI level, that would be my entry. My position size, emergency stop, 2 ATRs below. And then if I just simply get another close below the 30 RSI, I just get out of the trade. So hope that makes sense. Recap, AGQ, looking for some kind of rejection of the 200-day moving average for a potential entry. Anheuser-Busch, BUD, looking for some kind of rejection of the 200 for a potential entry. Walt Disney, looking for some kind of move down and rejection of the 30 RSI. Coca-Cola, looking for a close back above the 200-day moving average for a potential entry. And Philip Morris, looking for a close back over the 30 RSI. All right, let's get to the potential weekly trades if I can find them over here. Here we go. All right. So on the weeklies, what I'm looking for on Boeing is I am looking for a potential short if we move up and reject the 200-week moving average. So that either means it bumps up to it and fails, or it goes above it during the week and closes back below. You know, there's no magic to this 200-day moving average other than it is a key level that investors trade off of. And it also gives you a good structure to base your risk to reward ratio. So next week, if it rejects a bounce at the 200 or goes above it and closes below, that will be my potential entry for Boeing. The downward sloping 200-day moving average makes a lot of sense. It's making lower highs. This high is lower than this high. And if we reject here, this high will be lower than this high. So I don't want to just focus on longs. I also want to focus on shorts, but I have to wait for the market to get to a level and reject it to tell me. Doesn't mean it's going to be a winning trade, but it shows me, it's some good intelligence to show me that the market didn't like any levels above the 200. In the future, it may go above, but if it rejects it, more than likely, come back down. So that's what I'm looking for on Boeing. I'm looking for rejection for a short, the 200. Now on the shorts, I'll position size. I'll place my emergency stop 2 ATRs above. And then if it just simply closes, and after that, if it simply closes above the 200, then I'll just get out of the trade like I do with my longs or my shorts. So some kind of rejection to the upside of the 200, possible entry for a short position on Boeing. DDM, double leveraged Dow. So if you look at this chart, what comes to mind? Well, 200-day moving average. You can see last time the close over the 200 made sense. Had a nice rally. Well, now we're coming back down. If it rejects the 200-week moving average next Friday, meaning that it either bounced at the 200, close back over, I still have the support of the 200 above me, or if it goes below the 200 and then closes back above the 200, then it tells me that there were no more sellers under the 200 and it gives me the support of the 200 below me. So that's how I look at it. So some kind of bounce or intra-week rejection of the 200-week moving average, potential entry long position on DDM, double leverage down. Intel. Okay, good example here of a potential V2 entry. Now, in my course, I teach what's called a V1, return to value V1, V2, or a higher low V1, V2. They're great setups. Actually, in my YouTube channel, under my lessons playlist, I have a video where you can learn more about V1s and V2s, and they're one of my favorite entries. So, big picture here, the two green lines is the value zone. This is what I call the value zone. And the rules for this is we need to close above the value zone, which we did. We need to come back into the value zone, which we did. Then I need 2 days of sideways motion from the lowest point in the trade. Well, here's 1 day, 2 day, 3 days of sideways motion. Now, I'm looking for a V2 entry on Intel. V2 entry consists of 3 bars. Bar 1, bar 2 has to go below bar 1's low by a quarter ATR, which it does. Now, next week, if we close above bar 1's close, which is right here at 29.93, then that will be my entry point. And I want to show you quickly, but it has to close above 29.93. Let me show you an example of this, and it works on any time frame. And this is a trade that I took on Friday on NVIDIA, a day trade. So let's see if there's any similarities. This 5-minute chart. Here's the 1 ATR channel, negative 1 ATR channel. Did we close above it? Yes, we did. Did we come into the value zone? We did, but then we closed above it, so it all starts over. Then we came back into the value zone. Then we had at least 2 days of sideways motion. And then look, here's the V2. Bar 1. Did bar 2 go below bar 1? Yes, it did. Did bar 3 close above bar 1's close? Yes, it did. That is my entry point. My stop is a close of halfway the washout bar here. So I entered here, 387.65, moved up a little bit, moved up a little bit, moved up here, took some partial profits like I always do. Same with the daily or weekly. Here's my trailing stop level. So once I get to trailing stop level, then if I have a close below a previous bar's low, remember, as it is moving up, I'm continuing to take profits, locking those in, reducing my position size. So return to value, sideways motion, V2, moves up, take partial profits, get to trailing stop level. Here I have my first close under the previous bar's low. After reaching trailing stop level, I took off half the position here. It's holding my stop here, which is halfway the washout bar. Then we have another move up. As it moves up, I'm taking partial profits, taking partial profits, taking partial profits, lots of partial profits on this one. And then here we rejected the 70 RSI. So however many shares I have left, I sell half. And then I'm looking for a close below a previous bar's low after that to get out of the rest of the trade right here. So entered 387.65 out of some, 388.13 out of some, 390.05 out of some, 391.49. So this is a good example of a beautiful return to value, sideways motion, V2 entry point, taking partial profits, getting to trailing stop level, close below previous bar's low, another move up, taking partial profits as it happens, rejected the 70 RSI, getting out of half, and then having my first close below the previous bar's low after reaching 70 RSI. That's how it works, everyone. And so back to Intel on the weekly. Here we go. Above the value zone, into the value zone, sideways motion. All I need next week is a close above bar one's close will give me a return to value V2, just like I showed you intraday on NVIDIA. So again, this is what I teach in my course. We would go through this ad nauseum. We do all sorts of different examples, simulation trades, and that's why I think this course is so valuable, because you learn these setups, and these are setups I've learned over the last 28 years. But for next week, Intel closing above bar one's close would be exactly the same as I just showed you on that really nice successful trade on NVIDIA. Johnson & Johnson, okay. Let's look at the chart. What am I looking at? Where do I know there'll be some potential buyers coming in? 200-week moving average. This is what I'm looking for. If it bounces the 200 or has an intra-week rejection of the 200, then it tells me that 200 was respected. Doesn't mean it has to be respected in the future, but it was then, and that gives me the edge, and it gives me a good location to base my stop off of. Nike. Wow. Well, man, if I look at this chart, what am I looking at? I am looking here at the 300-week moving average. Remember the trade I showed you on IWM? Well, the 300-day moving average or 300-week moving average is what I'm looking for here. It's going to have to bounce at the 300 or go under and close back over. Doesn't mean it has to work, but it gives me my line in the sand to base my trade and my stops around. So potential rejection of the 300-week moving average. Rio Tinto, pretty easy, pretty clear, 200-week moving average. And if we look in the past, did it respect it last time? Closed under the 200, then over 200, had a huge move up, right? Lots of great trading potential there. Here, if I get a bounce at the 200 or an intra-week rejection of the 200, that will give me the ability to potentially take the trade and know exactly where my end of day stop is. SLV, silver, similar, right? You can see a pattern emerging here that the 200 is what I'm looking for, a move back down rejection of the 200. United Airlines, well, this is a short position. Here's the 200-week moving average. If next week we go up, reject that 200, then I will consider getting short. It's a downward sloping 200-day moving average. We have a big gap here after a structure change to the downside. This is actually short right here and right now using that approach. But what I'm looking for, I want to see the price go up, intra-week reject the 200, or just bounce underneath it and fail to go up any higher. So that is the potential short position on UAL. And then last but not least, XLU, utilities, a lot of money coming out of this. This is more of a safety trade, but this 200 upward sloping 250-week moving average makes a lot of sense right here. If we come down, bounce, or intra-week reject at the 250. You can see last time we got very close. That was about it. Then we had a huge rally. So that's what I'm looking for on XLU is a rejection of the 250-week moving average. So quick recap, Boeing looking for a short with a rejection above of the 200-week moving average. DDM looking for some kind of rejection of the 200-week below. Intel looking for a return to value V2. All that means is we have to have a close above 29.93. Johnson & Johnson would need to come back down, reject the 200. Nike, rejection of the 300-week moving average. Rio Tinto, rejection of the 200-week moving average. Silver, rejection of the 200-week moving average. UAL, looking for a short if we move up and reject the 200-week moving average, and XLU if we move further down and reject the 200. I think these are all really good potential trades. Again, if they all trigger next week, I'm going to narrow it down to the best one. How many do I have here? 9? Doesn't mean if they all trigger, I'm going to take 9. I'm just going to look for the best one. And how do I do that? Which one has the best risk to reward ratio? Which one looks best on multiple time frames? Which one has like a V1 or a V2 to accentuate the trade? The more confluences, combinations of indicators lining up, that's how I would narrow it down. It's kind of like a treasure hunt, right? Oh, I have 9 candidates for this job. Which one is the best one? And again, this is what I teach in my one-on-one course. You should consider taking it. You are going to learn a lot. All right. All right. Now I have monthlies, and a couple good ones, actually. So monthly bars close at the last day of the month, which is Friday. So let's go to the monthlies here. Hey, and by the way, if you like today's podcast, if you're learning anything from today's podcast, I really would appreciate it if you just take a second, hit the thumbs up button. Helps to build the channel, keeps the channel around. So if you could do that, I would really appreciate it. Southwest Airlines on the monthly. I've been waiting for this one a long time. Look, Southwest was almost $65. Now it's half price, $29.65. I don't think Southwest is going out of business. You never know. We always have to adhere to our process and our levels. But on the monthly chart here, 200-week moving average, look at this. 3 months ago, we tested it, bounced up. Last month, we tested it, bounced up. This month, again, we went underneath it and we've closed back above it. So if Southwest Airlines closes above the 200-week moving average this coming Wednesday, which is the last day of the month, I will definitely buy Southwest Airlines. I'll position size. I'll place my emergency stop 2 ATRs below. Next month, if it closes below the 200, I'll simply get out. If it moves my way, I'll take partial profits on the way up. I'll get to trailing stop level. If it gets to trailing stop level, then I'll get out with the close below previous bar's low. But I really, really like this trade. I really like this potential trade. One, because it's gone in half, doesn't mean it can't go lower. But again, I don't think Southwest Airlines going out of business. I think we have all flown Southwest, but the key is keying off at this 200 week. If it closes below, if I take the trade on Wednesday and it closes below the 200, the next week after, then I'm simply out of the trade. No harm, no foul, probably a small loss. But it gives me potential for a big up move, and that's the key to trading. Looking for levels that get rejected. If you're wrong, which you will be a lot of the time, getting out quickly. If you're right, having a process to follow it up, like taking the partial profits, going to trailing stop mode, so forth and so on. So that's what I'm looking for next month. But again, at the end of this month, but again, it's going to have to close over the 200. It is over right now. The 200 is 29.30. We're 29.65. So far, any attempts at going lower under this 200-month moving average have failed. All right. And then last but not least, Verizon. My gosh, Verizon. Ooh, I don't think Verizon's going out of business either. At the highs up here, we were $54. Now we're $35. This pays a 7.5% dividend, by the way. So what I'm looking for next week on Pfizer, or next month, at the end of this month, excuse me, on Pfizer, is some kind of rejection of the 200-month moving average. It's not there yet. You can see that the 200 is at 32.25. We're at 35 even. So it has some work to do still to go to the downside. But if it does go down, bounce at the 200-month moving average, or go under it and then close back over it, then it's definitely something to look for. More likely that that Southwest will be the entry because Verizon has so much more to go. But if it does, I would really like to buy Verizon down here. So that's it. Southwest Airlines, potential rejection, or it needs to close above the 200. That would get me long Southwest, or Verizon, some kind of rejection of the 200-month moving average down here. That would get me long. So at the beginning of the podcast, I talked a little bit about the lessons that I teach. Listen, everyone, they are great lessons. I have taught people from all over the world. I've taught absolute beginners. I've taught high-level hedge fund managers and everywhere in between. I'd love to be able to teach you what I do. I know you'll find it helpful. It will give you a skill that you can use the rest of your life. I choose the one-on-one format because I think it's the best way to do it. The lessons that I have, we do 5 lessons. Each lesson's 3 hours, so it's a long lesson. You're going to learn a lot, and I teach you all 5 of the different trading approaches that I use. I teach you step by step. We do all sorts of simulations, examples. I put the steering wheel in your hand after you've learned, and then you're going to pick out the trades. You're going to tell me what the right moves are after I teach you them. And it's a great way to learn. I've had so much good feedback, so many good reviews from the students that I've had all over the world. And so consider it. All you have to do is send me an email. My email is in the link of the description. If you do reach out, I'll reply and say, hey, great. Thank you for saying hi. Let's do a Skype call. Skype call is free. It's not a sales call. I just want to learn more about you, your trading, your challenges, your goals, and it's a great time for you to ask me any questions about the course. And when we're done with the call, after that, it's up to you. If you decide you want to take it, just email me back. We'll get it scheduled. And I know you'll be glad that you took it. It's very important to me that my students succeed in training. Now, if you like online courses, I do have a great online course available at udemy.com. I have the link in the description. I have a course called the Deep Dip by Stock Trading Strategy. Almost all of what I showed you today is deep dip stock trading strategies. You can use it on any time frame. That course is very affordable. It's between between $12 and $15. And don't let the low price fool you. There's 26 videos, there's 9.5 hours of content, 15 study guides, and I teach you step by step how to trade this approach. And it's a great, great online course. Again, in addition to my one-on-one courses, I've had so many good reviews on this course, so consider that. If you like today's podcast, I would appreciate if you could hit the thumbs up button. Really helps me out with the channel and lets YouTube know there's some valuable content. And last but not least, always the most important, everyone, if you like today's, if you'd like to make a difference in the world out there, please go out, try to do something nice for another human being today. If we all did one nice thing for another human being, it would make the world a better place. I'm a huge animal lover, so if you could do one nice thing for an animal, I would appreciate that. They would appreciate that. So let's just try to make it a plan, try to make it a goal. Do one nice thing for another human being each day. Do one nice thing for an animal each day. It really would make the world a better place. So I hope you have a good long weekend. I hope you had a good trading week. I appreciate you being here. I hope this was helpful, everyone. And God willing, I will see you next Saturday, and we'll see what the market did. Thanks so much for coming by, everyone. Really appreciate it. Have a good one. And on the way out here, I have to run the U.S. legal disclaimer. Thanks a lot. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.